One number, that's all I want you to think about right now. $124 trillion, not billion, trillion, with a T that is the single largest pile of wealth ever assembled in human history, and it is actively changing hands right now as you watch this video. And here's the part that should either excite you or terrify you depending on what you do next. Most of the people who will benefit from this aren't Wall Street insiders. They're not hedge fund managers or tech billionaires. They're regular people, teachers, nurses, marketing managers, people who earn decent salaries but still feel like they're running on a financial treadmill, working harder every year but somehow never actually getting ahead. If that sounds like you, stay with me, because this video was made specifically for you. I've spent years studying historical wealth creation cycles, the moments in time when economic forces aligned in ways that quietly transformed ordinary people into millionaires. And what I'm seeing right now is one of those moments, arguably the biggest one in American history. Here's what we're covering today. I'm going to show you exactly what's happening, why it mirrors previous events that minted millions of new millionaires, and the specific moves you can make right now to put yourself on the right side of this shift. And I promise you, the most important insight in this entire video is saved for the very end, so don't tap out early. Point 1. The pattern that created 15 million new millionaire households. Cast your mind back to early 2009. The global financial system had nearly collapsed, retirement accounts were shredded, fear was everywhere, but a small group of ordinary people did something quietly courageous. They kept investing. They didn't panic sell, they didn't run to cash. They just kept showing up month after month, putting money into boring index funds while everyone else was losing their minds. What happened next is remarkable. From that low point in 2009 through today, the S&P 500 delivered gains exceeding 900%. In that same period, the number of millionaire households in America went from around 8.4 million to nearly 24 million. That's 15 million new millionaire households in roughly 14 years. The vast majority of them weren't startup founders or executives cashing out stock options. They were everyday people who simply stayed in the game. The takeaway here is simple but powerful. Wealth isn't usually built in dramatic moments. It's built by consistent people who refuse to flinch. But here's where things get really interesting, because what's happening right now is actually bigger. Point 2. The $124 trillion wealth transfer and why it changes everything. According to research from Sara Associates, approximately $124 trillion in assets will change hands between now and 2048. Baby boomers, born between 1946 and 1964, currently control roughly 52% of all wealth in the United States. That's around $78 trillion concentrated in a single generation. The youngest boomers are in their early 60s. The oldest are approaching 80. That wealth is moving into their children's hands, their grandchildren's accounts, and into broader markets. To put that number in perspective, $124 trillion exceeds the total economic output of every country on Earth combined in a single year. It is 25 times larger than the entire COVID relief package the US government deployed during the pandemic. And right now, almost nobody is talking about it. Your action step: start thinking of yourself as someone who is living through a once-in-a-generation economic event, because you are. Point 3. Who actually inherits this money, and the bigger opportunity most people are missing. Okay, here's where I need to pump the brakes slightly, because this next part is where most people get it wrong. When they hear $124 trillion wealth transfer, they assume it means they're about to inherit a life-changing fortune. Maybe, maybe not. Research suggests about 62% of that wealth is concentrated among the top 2% of households. So the average inheritance most people receive will be meaningful, but it won't be a magic lottery ticket. That's actually not the real story here. The bigger opportunity is the ripple effect. When trillions of dollars change hands and get redeployed into investment accounts, real estate, businesses, and new asset classes, the entire economic ecosystem gets supercharged. Markets rise, property values move. New industries attract massive capital. Everyone who is already invested gets a tailwind. This is not about waiting for a windfall, it's about being in position when the wave rolls through. So the actionable move here is this. Get invested before the full wave arrives, not after. Point 4, where the money is flowing and how to align yourself with it. Still with me? Good, because this next part is where most people completely miss the boat. Research from Bank of America and Merrill Lynch reveals something fascinating. Around 72% of investors between the ages of 21 and 43 believe traditional stocks and bonds alone can no longer generate above-average returns. That belief is going to redirect trillions of dollars. Younger inheritors have radically different investment preferences than their boomer parents. They're drawn to artificial intelligence infrastructure, which is already exploding in 2026, clean energy, healthcare innovation, and alternative assets. This generational preference shift matters enormously. Capital is a river, you don't have to control it, you just have to stand where it's flowing. The takeaway: maintain broad market exposure through low-cost index funds so you capture whatever sectors surge, while paying attention to the sectors attracting the next generation's capital. Point 5. Real estate is about to get very location-specific. The wealth transfer is going to reshape housing markets, but not uniformly. As boomers pass away and estates settle, some markets will see a surge in housing supply as inherited properties hit the market. But markets where younger, wealthier inheritors want to live, cities and metro areas connected to technology and innovation, will face intensified competition. Since 2000, median home prices have climbed over 150% nationally, but that average hides a massive divergence. Some markets have tripled, others have barely moved. The same investment in two different cities produces completely different outcomes over 20 years. If you have any flexibility about where you live or where you invest in real estate, geographic awareness right now could be the most underrated financial advantage you have. Point 6. The professionals who will get rich from facilitating this transfer. Here's an angle almost nobody discusses. When $124 trillion moves, it doesn't teleport, it gets processed. It gets planned, managed, taxed, litigated, invested, and deployed. Entire industries will grow dramatically to service this movement. Financial planning, estate administration, tax advisory, wealth management, legal services, real estate brokerage, all of these fields are expanding aggressively and will continue doing so for decades. If you're in any of these fields or adjacent to them, your earning potential over the next 20 years has quietly become extraordinary. If you're not, consider what skills you could develop that position you to serve capital in motion. Now for the part that nobody tells you, and honestly, this is the thing that separates the people who actually build wealth from the people who just talk about it. The uncomfortable truth about wealth creation moments is that they never feel safe while you're inside them. The post-2009 bull market didn't feel triumphant while it was happening. There were terrifying corrections in 2011, 2018, 2020, and 2022. Every single time, the headlines screamed that the rally was finished. Goldman Sachs research shows that missing just the 10 best market days since 2009 cut annual returns from around 17% down to 12%. Missing the top 25 days nearly cut returns in half. And those best days, they almost always happen in the middle of the worst panic. The great wealth transfer will follow the same pattern. There will be recessions. There will be scary headlines. There will be moments when every instinct tells you to bail. The people who become the next wave of millionaires will be the ones who stay invested, keep contributing, and extend their time horizons. A 35-year-old today who puts just $500 a month into diversified index funds for 25 years. The full duration of this transfer period reaches approximately $665,000 at historical average returns. Push that to $1,000 a month as your income grows, and you are solidly past the $1 million mark. No inheritance required, no genius required, just consistency applied during a period when economic tailwinds are exceptionally strong. The window to position yourself is right now, not because there's some crash coming that you need to capitalize on, but because this transfer is already underway. The oldest boomers are 79 years old today. Every year you wait is a year of compound growth you don't get back, so here's your immediate action plan. First, maximize your tax-advantaged accounts, 401k up to $23,500 for 2026 plus your IRA. Second, own broad market index funds so you capture aggregate growth regardless of which sectors surge. Third, think about whether your career or skills align with industries that will benefit from capital in motion. Fourth, build a cash cushion so that when dislocations happen, you can buy rather than panic. Fifth, think in decades, not quarters. The information you now have is not secret, it never was. The people who got rich after 2009 had access to the exact same data everyone else had. The difference was that they acted on it, so I want to ask you directly. Which of these 5 action steps have you already taken and which ones have you been putting off? Drop it in the comments below. I read every single one and I want to know where you're actually at. If this video gave you a new way of seeing your own financial future, that's exactly what this channel is built to do every single week. I break down real economic shifts in plain language with actual strategies you can use. Hit subscribe so you don't miss what's coming next. And if you want to go deeper on how to actually invest during periods of economic uncertainty without making the classic mistakes, go watch the video I've linked right here. It directly builds on everything we just covered. Your future millionaire self is counting on the version of you that acts today. Let's get to work.